Very low fixed investment and a poor tourism season will substantially desolate economic growth in the second half of the year. Atilla Yesilada, Global Source Partners. Turkey's central bank cut a key interest rate for a third consecutive month on Tuesday. How will that affect the economy?
Monetary loosening is not going to have much of an expansionary effect in the economy because both the households and the corporates are extremely leveraged and the global financial conditions are being tightened once again as Fed is approaching the second rate hike. The central bank's rate hike could backfire because it is very likely to reduce the carry yield on Turkish assets and weaken the currency. If the current account deficit begins to expand again and Turkish interest rates go down, Turkish lira will weaken substantially, which would raise inflationary pressures and make it very difficult for Turkish corporates to roll over their maturing FX debt, which would slow down the economy.
Will the reshuffle in Parliament have any major effects on Turkey's economy?
It's certainly very good news that the neoliberal economist Mehmet Şimşek has been retained as the economy czar, and the moderate Mr. Naci Ağbal has been retained as finance minister. In general, this is a moderate cabinet which would stick to the former Prime Minister Davutoğlu's policy path. But above and beyond that, political risks continue in the shape of terror. The problem with Kurds vis-a-vis PKK, and of course the presidential question, which may lead to a referendum or even early elections.
Has the spillover of war from Syria and Iraq had any drastic effects on the tourism industry?
Turkey has gotten along very well with Iraqi Kurds. Unfortunately, it has reacted violently to the Syrian Kurds' objective of forming their own state, in return for which they have begun helping PKK, the insurgency of which has accelerated. Furthermore, ISIS has established beachheads in Turkey. Both terror organizations are now targeting Turkey, and suicide bombing attacks have accelerated. I counted more than 10 headline-grabbing events over the last 12 months. As a result, tourism revenues are expected to decline 20, perhaps 30% this year. Now, we got to put this in numbers. Turkey generates roughly $30 billion or 8% of its GDP from tourism. So a 20% or 30% decline is very important. Also, tourism is extremely labor-intensive, and a poor tourism season may mean rising unemployment and social unrest in the country. It could rob Turkey of 1% of the GDP growth rate. So yes, Syria and Iraq has an important economic ramification. Moreover, of course, Syrian refugees have depressed wages, have increased unemployment in the formal sector, while the economic problems of Iraq have depressed our exports to that region, and trade with Syria has completely died off. All in all, the turmoil in the region has reflected very poorly on Turkey's economy.
What did the consumer confidence release on Monday tell us about the population's spending power?
Consumer confidence is sharply down. We also see the same thing in consumer loan numbers. Poor consumer numbers, if they translate into actual spending, is bad news for the Turkish economy. The consensus forecast for Turkish growth this year, as measured by the central bank's monthly survey, is 3.6%, but our house estimates 3%. We expect, in addition to poor consumer confidence, a very low fixed investment and poor tourism season is going to substantially decelerate economic growth in the second half of the year.
Thank you for your insight today, Atilla. Don't forget to check back throughout the day for the latest business updates. Goodbye for now.